Welcome to Overnight Market Brief, pre-market edition by AGI Era. Good morning. Today is Monday, January 26, 2026, and it is shortly after 8 a.m. Eastern Time. This is your executive summary of global market developments, analyzing the overnight flows in Asia and Europe, the key macro drivers, and the setup for the North American Open. The prior session and macro context. First, a look back at Friday's close. Wall Street finished on a slightly positive note. The S&P 500 settled at 6916, gaining 0.03%, while the Nasdaq 100 gained 0.34% to close at 25605. Crucially, the session was driven by improving U.S. consumer sentiment, but the real story right now is in the macro assets. Right now, the 10-year Treasury yield is trading at 4.207%, lower by 0.50%. The U.S. dollar index is weaker at 97.8, while crude oil is slightly lower around 60.88. Gold, however, is significantly higher, trading around 512.51, up 2.66%, suggesting a flight to safety or inflation hedging despite lower yields. The weaker dollar and lower yields typically offer some support to equities, but the surge in gold indicates underlying caution. Overnight session, Asia and Europe. Moving to the overnight session, global markets have been mixed with a cautious undertone. In Asia, the picture was mixed. In Tokyo, the Nikkei 225 finished lower by 1.78% at 5218885.25, tracking a stronger yen amid speculation of potential Japanese currency intervention, despite BOJ money market data suggesting no intervention on Friday. Meanwhile, in Greater China, the Hang Seng gained 0.606% to 26,765.52, while the Shanghai Composite was slightly lower by 0.099% at 4132.61. The divergence here was driven by localized factors, with the Hang Seng showing marginal strength while the Shanghai Composite saw minor consolidation. In Europe, major indices are trading with a cautious tone. German business sentiment remained unchanged in January, and Spanish industrial prices fell, contributing to a defensive posture across the region, providing a subdued lead-in for U.S. traders. U.S. futures and the open. Turning to the U.S. pre-market, equity futures are slightly lower. S&P 500 futures are trading lower by 0.10%, while Nasdaq 100 futures are lower by 0.23%. The relative performance suggests a slight rotation out of growth-oriented tech stocks, with Nasdaq futures underperforming S&P futures despite the overnight dip in Treasury yields. This could be indicative of broader risk-off sentiment stemming from Asian markets and the strong move in gold. The daily catalyst. Looking ahead, investors are focused on three key catalysts. First, the ongoing geopolitical landscape, particularly developments in Asia and any shifts in global trade policy, which continues to drive market sentiment. Second, central bank rhetoric, with market participants closely monitoring any comments from global central bankers for clues on future monetary policy. And finally, corporate earnings reports, which will provide critical insights into the health of various sectors and the broader economic outlook. With a light economic calendar, flows may be driven primarily by technical positioning and these broader thematic narratives. Given the overnight setup in rates and the dollar, coupled with the cautious tone in global equities and the surge in gold, the market's path of least resistance appears to be range-bound with a slight downside bias, pending any surprises from the evolving geopolitical and corporate news flow. That concludes your overnight market brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.